Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways, by taking only high probability and low risk trades that have the maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time using Q systems. You could. When is stopping the right trading decision? Is now such a time for swing trading stocks? Most of you watching this video, if not all, are active traders. Active means you keep an eye on the market. If you see a trade that meets your style, you take it. I'm also a trader like that. I always have cash available to take a trade I like. But there are times I like to avoid trading, at least as far as swing trading stocks are concerned. What are those times? Some relate to the country macro factors. Sometimes the market does not have a clear directional bias. Some reasons are specific to the stocks, some others are due to the trader's situation. Now is the perfect example of country market factors telling one to stop swing trading stocks. The US election is next week. That increases uncertainty too much. All the market and stock analysis may be futile. Buying or shorting stocks and hoping the market will move in your favor is not a profitable trading strategy. It is better to stop swing trading stocks with the election just around the corner. Sometimes the market level analysis does not yield a clear preferred trading direction. That is also a time to stop trading or reduce trading at minimum. We'll look at the market using Q analysis to see if that is true today. At the stock level, before and close to earning is a time to avoid swing trading stocks. Earning moves are unpredictable. It is better to stop swing trading stocks before their earnings. Now is the earnings season. That prohibits us from swing trading the stocks whose earnings are nearby. Sometimes the situation in the trader's life is not suitable for trading. That may be due to the loss of a loved one, health issues, or due to family or work related stress or other adverse situations. You can recognize such a situation from how the trades are identified and selected. The trades will usually be random without any systematic approach. The Q diary will also show it. That is a time to take a break from trading until the situation returns to normal. Notice I specifically mentioned swing trading using stocks. Apart from the last scenario, one's mind is not steady enough, one may not need to stop trading altogether, may stop swing trading using stocks but may not need to stop trading altogether. It is perfectly alright to take precision intraday trades. It is also okay to swing trade using option vertical that has defined risk. I'm continuing to take such trades and profiting from them. We may keep the above discussion in mind when we look for trade candidates today or next week. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using only one trading system, Q systems, that I developed myself. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I'll use many of them in today's session. Now let's start with the live charts. I captured some of them to save time. We are starting with dollar index. Let's look back. Dollar index came to jump thrust low at price extreme low. Usually such down moves are unsustainable. Right at that time came the unique bullish headwind possible reversal signal, then came the bull release signal. As is often the case, price retested the watermark level created by the bullish headwind and then made a rally. At the top it displayed a bearish headwind followed by a cluster of bearish indecision from where price pulled back little bit, did not give us any short setup, pulled back little bit, stopped above the white direction line. Yellow direction line is also below price, so it is now in a confirmed uptrend. On Friday, it closed strongly bullishly with a bullish reversal candle. If Friday's move is any indication and the strong uptrend is any indication, then we may expect dollar index to continue to go up. The next thing to watch is whether this trend line resistances can be broken. If they are also broken, then it will put pressure on the market. If the trend line resistances hold and price can tilt down from there, that may help the stock market. There is one more instrument that has huge impact on the market like dollar index, that is mega cap index. This is mega cap index. Let's again review the signals. It displayed a bearish headwind, possible reversal signal in weekly from where price came down. We are seeing a bearish reversal headwind here and we saw a bullish reversal headwind earlier in dollar index. As is not uncommon, again price retested the watermark created by the bearish headwind, and as of Friday's close it has completed a false upside breakout and the backdrop color has changed to bearish, flipped from bullish to bearish with also a bear release signal that is looking bearish. In the daily, it created the same false upside breakout. Friday's candle color is remaining bearish, though the shape is indecisive, and there is a trend line support just below Friday's low. The weekly and daily colors are telling that it is not time to buy, and the trend line support is telling that it is not time to short. It is telling us to stop trading. Q market breadth invaluable in assessing the internal health of the market and anticipating a change in market direction. Proof of pudding is in eating, and I will show the invaluableness of these studies right now. Last week I did not make the market recap videos. I was traveling, and this is one of the places I visited. 2 weeks ago, when I made the last market recap, this is one snapshot I shared. What it is? It is a market breadth, that is internal study of the major indexes using Q market breadth. And at that time, this is a snapshot from 2 weeks ago, I pointed to the extremely overbought situation across all the 5 major indexes: Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, S&P 500. All of them were so extremely overbought in the 3-month new high-low oscillator that I expected a pullback, even though the market itself was making a new all-time high. Some other pockets were also overbought in terms of the percentage of stocks above 50-day moving average oscillator. As far as 3-month new high-low is concerned, all the pockets were extremely overbought. Works like a clockwork. That's one of the values of the breadth charts. Let's see the same charts today. Major indexes. Dow Jones Industrials pull back. I'm pointing to the 3-month new high-low pulling back, and if that pullback, obviously some stocks also came down. We can see the indexes themselves also came down, and if you could identify using Q systems, if you could identify the stocks that were contributing to the 3-month new high-low being extremely overbought, you could look for lucrative shorting opportunities in them. Like a clockwork, they give us a profit, and I will later review one of the reversal trades I shared in the last market recap and how it turned out. In any case, the 3-month new high-low oscillator and also the percentage of stocks above 50-day moving average oscillator worked beautifully. They resulted in significant pullback. What is it telling now? Now the 3-month new high-low oscillator is in the neutral to somewhat bearish territory, not extremely oversold yet. So I am not expecting a bounce from oversold condition because it is not oversold. It is somewhat bearish to neutral. And if I look at the percentage of stocks above 50-day moving average, that is also somewhat bearish to neutral. Doesn't give us enough signal to trade in either direction. In other words, it tells us to give a pause in trading. If we look at the market breadth total view, the broadest view of the market, what does it tell? Let's review what I shared in the market recap 2 weeks ago. At that time, I pointed to this cluster of new high low percentage, new high new low percentage, extreme overbought cluster, and showed that every time the cluster came earlier, it generally led to a price move downward. And I was expecting a price move downward from there. If you look at the candle chart, a decline happened. Of course, this is the total view, very broad market breadth. Individual stocks would have dropped much more. That is why the breadth charts, these signals are very valuable in anticipating a down move and profiting from that. At the time, the new high, new low gave us an alert. The Bango signal, irrational exuberance, created by Mr. Ian Woodward, may him rest in peace, also alerted us to be cautious. So that worked beautifully. Market pulled back somewhat, and this week we have something that is cautioning us more. A cluster of Hindenburg-Omen signals. 3 in this week. That's a lot. And I had my last market recap on this day. After that, 1 week ago, there was one more. So 4 additional Hindenburg-Omen signals came, confirmed signals. We'll shortly see where from they came, NYSE or NASDAQ or both, but plenty of warning signals coming from the Hindenburg. That tells us to stop buying. It does not tell us to stop shorting, but certainly it tells us to stop buying. Where did the Hindenburg bugs come from? Today is one day, 1 week where after many weeks the confirmed Hindenburg came from both NASDAQ and NYSE. Even more reason for caution. Tells us to avoid buying, does not tell us to avoid shorting. And lastly, I would like to show the total view using at a glance weekly daily. Noticeably in the weekly the trend line support is broken. Backdrop color is now bearish for 2 weeks. The weekly tells us to short, not to buy. Daily created a false breakout. Traffic light color is bearish, tells us to short. However, the yellow direction line is just below Friday's low, just below weekly low, doesn't allow us to short. So once again, the total view at a glance does not allow us to buy, does not allow us to short. And if you look at the daily candle chart, it is still in an uptrend, still has higher low and higher high. It had an orderly pullback to the yellow direction line. That is not where I would like to short. White direction line is not very far away. Instead, if it goes up, that's a big if, that may give buying opportunities. But that if has not happened yet. What is the external view? This is a finder using QElite performance finder of the market ETFs using weekly interval. My last market recap was 2 weeks ago. Isn't it interesting? And I can assure you it was no coincidence that my last market's recaps topic I chose to be contrarian trades. And market was making new all-time highs and I chose a bearish trade for that week. I explained how to take effective contrarian trades. Notice what happened in that 2 weeks. Market fell down across the board for all the market ETFs. 3 of them fell by more than 2%. IWM fell by almost 3%. That significant drop considering market was at very high price level. This week also market ETFs generally dropped. One exception is IWM. IWM, you can say it's unchanged, practically unchanged. Slight up move, but for all practical purposes, it is unchanged. All the other market ETFs dropped by non-significant percent, and more drop was in SPY and QQQ. That is also one thing I alluded to in the previous market recap 2 weeks ago, that especially QQQ might drop if the mega caps lose their steam. That seems to have happened. But that does not mean the market has suddenly turned bearish. We saw from total view, it had an organized pullback to the yellow direction line. It is still in an uptrend. Now we are going to look at the individual market ETFs to see if they suddenly change to downtrend. I doubt that, but let's find out. Two questions I always ask myself when I look at an instrument for trading. What is the trend? What is the preferred trading direction? Here the weekly backdrop is bearish for SPY, bearish for 2 weeks in a row. In daily, the bearish headwind once again could catch the very high. That's the beauty of some of the Q signals. Unique signals, they help us anticipate a move and start trading in that direction, in this case bearish, before others take notice. It pulled back from the bearish headwind. Friday's traffic light color is bearish. However, price stopped just above the yellow direction line. It is still in an uptrend in daily with higher low, higher high. Had an orderly pullback. Doesn't allow buying looking at the weekly daily colors. Doesn't allow shorting looking at the support and it being in an uptrend. Tells us to avoid trading. QQQ, like the mega cap index, it broke the weekly trend line support. Backdrop color is bearish. Daily traffic light is bearish. All that tells us not to buy, and price stopped just above the yellow direction line, still in an uptrend with higher low, higher high. Doesn't allow us to short, tells us to stop trading. Dia, again the trend line support in weekly is broken. Backdrop color is bearish. Daily had an orderly pullback to again the same yellow direction line. Doesn't allow us to buy, doesn't allow us to short. Notice that this is the first market ETF we are seeing so far where the daily momentum traffic color is neutral, not bearish. SPY and QQQ had bearish traffic color. So if the market goes up from the yellow direction lines, then Dia may be giving a buying opportunity before SPY QQQ. We may keep an eye on that. In if that happens, instead of trading Dia, we could use Q index to look at the strongest constituent stocks and buy them. Anyway, right now it doesn't allow us to buy or short. IWM almost unchanged, slightly, very slightly went up this week, but that does not make it bullish. Backdrop color is bearish. Here the trend line support in weekly is not broken. In that way, it may be considered stronger. Daily was inside a range created by trendline resistance support and also support from the yellow direction line. price stopped just at the yellow direction line once again. This is range bound, not in an uptrend like the other market ETFs. It is right in the middle of the range, doesn't allow us to buy, doesn't allow us to short. If it can go up from the yellow direction line, it may allow us to buy. But right now, it tells us to avoid trading. Bucket analysis and sector industry stock breadth using Q Edge helps to decide preferred trading direction that may be different from the current market trend. 62% of S&P 1500 stocks are below mid-Bollinger Band. That is bearish, but it is not extremely oversold. Friday's market is somewhat bullish. It is not bearish. So though the overall market is bearish, Friday's sector industry stock breadth was slightly bullish. When we look at the transition of sector industry stocks breadth from 1 month to 1 day, we find some confusing movements, indecisive movements. From long term 1 month to long term 10 day, the bearishness increased. Red is bearish, green is bullish. From long term 10 days to medium term, this week's 5 day, still bearish, but bearishness reduced. From 5 day to 2 day, bearishness increased again, and only from 2 day to 1 day, it became bullish. This is confusing, meaning indecisive. Confusing in this case means indecisive where the market may go. But if we look at Friday's move, that tells us definitely not to short. There may be a case for buying when you look at the sector industry stock breadth transitioning from one period to another. Doesn't tell us to buy strongly, because Friday's pattern is just slightly bullish after a quite indecisive come bearish pattern earlier. But if at all, it doesn't tell us to not buy. It tells us to not short. That's the Friday's move. Technical breadth, invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setups for individual stocks. Weekly pattern, all setups bearish, strength setups bearish, continuation setups bearish, reversal setups also bearish. Doesn't allow us to buy, allows us to short. Daily also, interestingly, though the sector industry breadth was slightly bullish on Friday, finally we take trades with trade setups, and as far as setups are concerned, the market remained bearish. All setups Friday bearish, strength setups bearish, continuation also slightly bearish, then bullish, and reversal clearly bearish. So technical breadth, very important part of swing trading profitably, is doesn't allowing us to buy. If anything, it allows shorting. Mixed signals, market level summary, combining insights from all the market level analysis, the conclusion is to stand aside, not to take longs or shorts. Standing aside is, of course, also supported by the major event, very major event, very major event of the USA election coming next week. One could look for 360-degree buying candidates. I'm not trying to look for shorts because all the market ETFs and several other market charts are right at support. So I'm not going to short when support is nearby. If anything, I'm going to look to buy when I'm at or near support. That is the case today. So one could, and I did look for 360 degrees buying candidates and take them maybe on Monday or next week, only if the stock continues to move upwards. Due to the USA election related volatility and huge uncertainty, the appropriate instrument, certainly for me, may be options verticals rather than buying the stocks outright, thereby having defined risk trades. Let's review last week's trade ideas. Only one that I shared last week. Sorry, not last week. Last week I didn't have the market recap. So 2 weeks ago, in the last market recap, last recap's trade ideas, only one UAA. That was a contrarian trade. I suggested a bearish trade in UAA, and you can see UAA fell by much more than all the market ETFs in those 2 weeks. It underperformed. My stock pick once again was very accurate. Amazing success rate, isn't it? We don't need 100% success rate, but my success rate is amazing, and the secret of that success rate, as I say, is nothing secret. Open secret is the fact I am aligning forces from all factors, as many factors as I can, certainly from market, sector, industry, stock fundamental, sometimes even seasonality, and of course technical. And I'm doing that using the best quality data possible and all real-time analytics. So UAA was the trade setup I shared last week. Let's look at the stock. UAA, isn't it amazing that right on this day, yes, right on this day when I had the market recap 2 weeks ago, I identified as a short candidate using several signals on technicals, but one major signal that I used was this unique bearish headwind possible reversal signal. The risk would have been this distance stop being above the recent swing high, and of course it fell by much more than the risk distance. Looks like 2:1 ratio already. Along the way, using Q guidelines, one would book partial profit and use trailing stop on the remaining position. Perfect contrarian trade taken at the top of the market, taken at the top of the stock itself. And you may review my video on how to take contrarian trade successfully or re-watch it to implement it in your own trading. This week's trade ideas. With the understanding of this week's theme that it is not really the best time to swing trade stocks, at least we could still look to find a buying candidate, and one stock that I like is Okta, OKTA. Why I like it is because it has the lucrative buy pattern, and again the most lucrative, meaning low price buy pattern that has very high success rate. I covered this topic in one of the recent market recap videos. You may watch that or rewatch that. This stock OKTA has that pattern. Jump thrust low, price extreme low, all of a sudden came big move up 3. Price retested the watermark, came to the trend line support, meaning it already has higher low. It had a trend line resistance. It was inside a triangle. It broke out of the triangle with a very bullish shape and color candle on Friday. Okta is a stock I'd like to buy if it continues to move upward, probably using options verticals. But let's look at the stock in more detail. Let's look at the complete 360 degrees analysis. Let's find its fundamentals. quite fast today. High earnings growth, positive revenue growth, short squeeze potential, profitable company in industry that is quite strong. On Friday, 71% of PR stocks went up in internet services and infrastructure industry. That happened when the market itself was not so bullish. So this industry certainly did better. The stock did quite all right, gave us a breakout setup, and this is earnings season, but this stock's earnings is 1 month away, 3rd December. Let's look at its seasonality. Why not just a click away? Earnings is in December, and in December we have quite bullish seasonality, a further reason to consider buying. And if I look at its relative industry score from QEdge, one more click away, all using real-time analytics, and you already know that. Not one of the strongest industries, but it is showing acceleration, an industry that was up, and Vital showed in itself the industry was strong. So now I would like to look at the stocks at a glance chart. I already showed you the daily chart. When I look at weekly daily together, it has more reasons to buy. Daily analysis I already covered, has a breakout setup, lucrative buying pattern. Daily has weekly memory trend line support. I always say longer term support, shorter term breakout. Those are some of the most reliable technical setups. And here we have a low risk trading potential, low risk potential. So this is a stock that I am selecting with this week's theme, of course, in mind. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples, I'm quite confident shows there is no reason not to do that. Trade profitably. Thank you.